Aloha. Friday the 13th, 2023. Taking a look at the paper trading account. Is Friday the 13th a bad day? Is it a good day? I think it depends on what you believe. Your good buddy Brent believes it's a great day. In fact, any day in this calendar, no matter what month, no matter what day, no matter what year, for me, it's a good day. If you watched yesterday's paper trading video, then you know that I had been trading these E-mini futures, right? And I think yesterday there was two different trades. One of them was just a naked. Was it maybe I sold two at two different times. Sold a naked put, close it out for some profit. Sold another naked put, close it out for some profit, and then afterwards I put a strangle on there. And I think this morning when I woke up, it was closed out for some profit. Risk reward wise, it's terrible. It's humongous risk. It's like risking thousands of bucks to make a whopping, maybe 80, which I closed it out for I think 50 or so. So risk reward wise, not good. Learning wise, great. There was a time when I was selling a lot in a live account, selling a lot of real money, selling options on crude oil. Some dynamics changed though, so I pulled back a little bit into paper trading to get a grip on the different dynamics, and I want to add trading S&P, but I'm actively doing some other stuff. So anything that requires a little more concentration, I'm gonna practice in my paper trading account a lot more. But nonetheless, that closed out as a profit yesterday or this morning or something like that. And right now for the crude oil, I got a naked call at a strike price of $100 strike price. Opened that up on the 11th, and 32 days left to expiration. I brought in 17 cents. With crude oil, futures contracts varies from asset to asset. With crude oil, you're looking at 100 barrels of oil per contract. Excuse me, 1,000 barrels of oil. So it's 17 cents times 1,000, brought in 170 bucks. And right now, I could theoretically close it out for 14 cents or $140, giving me a $30 profit. And Apple got to keep managing this one. 20 days left till expiration, right? It got this strike at 150. Switch this over here. I got the strike at 150. Up here, got that the option sold at 150, the strike price here. You can see those pretty strong update. The whole market has been moving up lately. So going into next week, I want to see what happens. This 135, it's a little bit below this 135, and it doesn't surprise me that it see that little top right there. You see one down here. You see one down here. See it pulled up higher, tried to get to that 135, but selling brought it down just a little bit. Why? Why is it happening like that? Because there's some resistance right here at 135. How do I know that? I see how prices kind of clump around there. I see how prices touched here. I see how prices touched here. Looking at the last 3 years, 135. Where is 135? Maybe it's kind of, let's do it this way. Where's 135? It is, boom, about, okay, whatever, roughly right, right in there, right? So we see prices touched here, here, right, going over here. Oh, it's a little lower right there, right? But it's, we see it right in there. It's 137. Going back over here, look at that, touching around that 135, right around that 135. Okay, 136. So it's got a fair amount of that area, 135, 136, whatever, 134. That area is acting a good amount of support, resistance, depending on what side it's on. And right now it's on the, it's below it, right? So it's going to act as some resistance. Now next week, if this continues to go up, and see how this week being 1, 2, 3, 4, 5, right? This is 1 week of trading right there, right? See how it was between, by the end of the week, we see it's touching this 135. How many days left on this contract? 20 days, right? So next week, if this same thing starts happening, moving up to this 140, and I see that it's basically breaking this resistance, and now that 135, whatever, that 135-ish area, if it breaks through that and it starts acting as support, then I got to start watching even closer. I got to see what's going to happen around, see the same thing around that 140, right? Prices touch here. When it fell here, right, prices come down right here, get close to that 140, boom, pivot, comes up. At this time, why did it do that? Well, it could have been short covering rally. It could have been a combination of people covering their shorts and people thinking it was a good price to buy right there. But around this part, buying pressure stepped up and pushed that price up here. When it got here about this, getting close to this 150 though, right, selling pressure pushes it in back down here to this 140. And then some buying pressure sort of starts eventually putting up here, but it came down. So and then there's this candle, and then it kind of gaps down, and boom, it breaks below that 140. So it's like buyers kept stepping up around 140, but right here, no, selling. So if it starts, if next week we see it going into the 140s, then we'll see what's going to happen. The same thing. So it's kind of like in these $5 increments that I can kind of manage it. And ultimately, you know, we'll see what happens next week. But there is $20 between what is it, or $25? I don't know. My mental math is not the greatest by any stretch of the imagination. Okay, $15, roughly $15 between where it's at now and 150. But it's in these $5 increments that it's kind of doing this, right? So I feel like I've got 1, 2, 3 levels of little support resistance area that I have to interact with in order that I can manage this trade. And if it starts looking like by the end of my contract expiration that I'm going to be needing to fulfill my obligation of providing 100 shares at $150, then I'm going to try to buy 100 shares somewhere up above 145, but below 150. Even if I buy it at 149, I don't care. Make $100, make whatever, $30 on the premium, cuts out my risk. And the problem with that though is, you know, it ties up whatever $14,000. If you want a cheaper way, you could add turn this naked option into a spread, or you could just roll the option. But I'm practicing buying shares and turn it into a covered call. I'm doing that because I have a tendency to sell options on stocks that I wouldn't mind owning. So that's what I'm practicing. Practice what I'm preaching. I'm preaching paper trade, you know, practice like you're going to play. So that's what I'm doing. All right. So that one, I think that one is the one that kind of needs the most attention at the moment, right? Because it's moving against me. All these other ones, have some long-termness to them. This one, this one were sold with selling options via the VIX. And what I'm going to do is right up here, I'm going to be putting a link to a playlist that has all these different paper trading videos. You can pick and choose which ones you want to watch, but if you want to learn that strategy of selling options with the VIX, look through that playlist and find the video that says selling options with the VIX. There's part 1 and part 2. You can check that out. But you see this Amazon right now, that is since the profit and loss, since the open, it's up 52 bucks. This gold, that's a strangle. That one is down by 35, and this one is up 550. This one is down a little bit over 1,000. This one's up 20 bucks. This one 1,400. Now, when I first put this one and all these, I literally was just like, okay, I'm doing this. I'm just doing it to see what happens. With hindsight, I would have probably closed them out earlier, because there's a time I could have closed out this SPX at like 2,600 profit. So it's a learning process. That's the point of paper trading. And these, that's the first time I ever did that. This is the first time I've ever done this long dated strangle, because all these options besides this Apple one, these are all expiring. Look at that, 773 days. Right, they're all expiring like 2024 or 2025. So I'm testing out selling options with leaps. Short stock, this one, when was it? Well, apparently October 20th, I decided to short one share of the S&P 500. I don't really remember why. Maybe I was making a video and I just talked about it and I forgot about it, but nonetheless, it's there. So I'm just letting it linger around and seeing if sooner or later it's going to close out. I got a limit order to close it out at 360. So the stock market's obviously moving in the wrong direction right now, and I'm just going to let that linger around. Long stock. Now this is actually not long stock. I'm trying to get long stock, right? You trying to get long stock? You talking about getting long stock? Yeah, I'm talking about getting long stock. I'm trying to get long stock via selling cash secured put options. And days till expiration. Oh, look at this one that expired. Did it expire worthless? Yes, it did. Look at that. This Walgreens closed at 36.78. The option contract was for 35. How much money did I bring in? I can't quite remember. But anyways, so that expired worthless. And so maybe I'll just sell another option on Walgreens. We'll see. Maybe I'll sell another option on a different one. We will see. But I did this with my buddy. It's like put on paper trade, show him how selling a cash secured put option works. So that one expired. H&R Block, looks like H&R Block is above our strike by 85 cents. Technically, I could close this out with a $22 profit, right? And not wait these 6 days to see if I get assigned. But I kind of would like to get assigned. That way I could sell some covered calls in this paper trading account, make some videos on, the wheel strategy, sell cash secured put option until assignment, and then from there, if you get assigned, sell covered calls until assignment, and then you just do the same thing over. If you want to learn more about that wheel strategy, I'm going to link to a playlist right here, and it is basically teach you how to do the wheel strategy, teach you how to set up some charts, teach you how to use the Yahoo Finance screener, screen for some good fundamental stocks that are in your price range that you can buy 100 shares of. And so Cal-Maine Foods, got 6 days left on that. Strike price at 50, it's at 54. So we will see if we get assigned. And that is it, my fine trading, investing friends. Like that's what's happening. It's Friday. The stock market's going to be closed on Monday. And so slowly making more money. Overall profit at the moment, if I close everything out, up up $1,000, but the ones we really got to see are right in here, these learning ones. This one I'm not so much learning. I'm fairly confident this is gonna work out to my advantage. In fact, if this was a real money account and I just had whatever $100,000 in here, I probably wouldn't be doing these speculation things. There's a good chance I'd just be focused on selling naked options on crude oil, just because I have experience with it and having this much capital to work with. If you have any desire to be selling options in the futures account, you need a deep pocket account. You need some money. You could do it with a $10,000 or $20,000 account, but you're running into some risk because of the margin requirements and how margin can fluctuate, right? If this starts moving against me, this is one contract, right? I brought in 170 bucks. One contract taking up a buying power of, when I opened this, it was over 2,000, but let's say 2,000. You know, maybe put on 10 contracts, right? But you want to have some wiggle room. So right now I'm doing all this other stuff. This is putting up buying power. But if you just wanted to trade in your paper trading account, you just want to trade, like do this with oil futures, you want to have a dedicated account to it. And whatever money you have in it, you just want to be trading this. And so that way, and ideally, you never want your buying power to go over 50% of what you got. Right? Don't put on contracts. If you put on contracts, like at the most, take up 50%. So if the cash I have in my account is like you know, this amount. Well, let's just say 100,000 just to make the math easy. Then I want my buying power to be no more than 50,000. So that way, if the position starts moving against me, right, it can move against me like, it can move against me 20%, and it brings up my buying power to 70,000. But I got 100, so I still got 30 to go. But I'm starting to look at possible danger zone, just like how I'm managing, you know, this moving up against me. You got to manage if you're selling naked options and futures. You got to manage it via your margin or whatever buying power against that. I'm telling you what, it is more complicated. It's more complicated. You don't want your life complicated. You want something really, you want to simplify your life. Right here, sell cash secured put options on stocks that are good. Good stocks are going to be around the rest of your life, and sell at strike prices that you're happy to purchase at. And be able to, when I say cash secured, it means you got the money to buy it. Be willing to buy it, right? So that's it. You guys have a fantastic weekend. Happy Martin Luther King Day. We'll see you on Tuesday. Aloha.